Hey, have you ever gone to bed only to find your stop loss was hit and your trade's gone the next morning? It's a common headache, right? Well, at Learn and Trade Forex, we've seen it too, and we've got a solution. What if there's a better way to set your trade so that you can sleep without worrying? What makes the usual stop loss approach fail? And how can we do it differently? Today, we're going to talk about setting your stop loss in a way that really changes the game. Ready to stop worrying about your stop loss being hit? Let's dive into how we can make your trade safer and your nights more restful. Join me and let's change the way you trade with Learn and Trade Forex. Alright guys, so let's hop right into it. Let's get straight to the point of this video. It's all about stop loss placement when you trade. Now, before we start, I'm going to caveat a few things about this stop loss placement strategy. Well, the first thing I want to caveat is your stop loss is going to be a little bit wider than usual, but I guarantee you're going to win more trades, a lot more trades than you probably do now, especially if you're struggling with stop loss placement, your stops being taken out due to untimely swings in the market, stop hunts, things of that nature. So yeah, your stops will be a little bit wider, but I can almost guarantee you that you're going to win more trades. Okay. Another thing I'm going to caveat in this video is that this strategy is best used on the higher time frames. You can use them and apply the same principles on the lower time frame, but you don't want to go too low, because once you get around the 5 minute, the 1 minute time frame using this stop loss placement strategy, the candles are so you get a lot of bullish and bearish candles more often than you would on the higher time frames. So it kind of negates where you're going to place your stop loss. It's not as clear. So the 15-minute time frame, which is a very low time frame, will probably be the lowest I would go to place the stop loss during this strategy. So let's go ahead and hop into it and let's take a look at it. Okay. So first we're going to start off on the daily time frame, and this is a pretty simplistic concept, but most people don't trade this way. So let's start off on the daily time frame. Okay. Let's find a trade entry. So I'm gonna expand this chart a little bit, and this would be a trade that I would take to go short right off the close of this candle. Okay. I would place my potential stop here. Well, this is really not a good example, only because there's nothing challenging this stop. So we're going to find another example, something that would challenge the stop. So let's look at this example down here, because we have a lot of candles that are closing at the same levels. Okay. So this is a prime example why this strategy works so well. Okay. So let's say, for instance, I saw price bouncing off this level, exhaustion was here, and I think price wants to trade to the upside. Okay. And at the close of this candle, I want to go long, right? Because it broke this level and it looks like price wants to start trending long. And if you go over to a weekly time frame, you may say, you know what, let me change my charts. Sorry guys, let me change my charts a little bit and add my support and resistance indicators, because we can look at the levels a little bit better. Okay, so let's find a trade. Okay, so back to that spot right here. This is a really good example, right? So let's say we went long here, right? But if we would have placed our stop at the low of this candle right here, or even at this low of this candle right here, then price would have probably came and took us out, right, at the low of this swing low. But let's look at a different way to place your stop, right? So let's say we went long here at the break of this buy stop order. went long here. Our initial stop loss was, let's say, the break of this swing low here, right? That's probably where most people would place their stops, at this swing low, right? But you see these two candles here, they had the ability to come and try and stop us out before we realized the move up. Here is how we're going to avoid these swings from happening, right? So this is my entry candle here. This is my signal candle here. So this is the day that I am trading on, right? So to enter this trade, I want to go down to the 4-hour time frame to adjust my stops in my entry, right? So I want to place my potential entry on the daily, but I will go down to the 4-hour to adjust before I actually initiate the trade. So let's go to the 4-hour. Okay. So here's the magic with this stop loss placement. Again, the signal, this is where I would initially be taking the trade. This is the beginning of that trading day. And as you can see, price came in China. They open up the spread here, you're going to get stopped out. This one probably just stops you out automatically, right? But here's how I look at my stop loss. So this is the level. This is the swing low level right here. Remember, we don't know this stuff over here is going to happen yet. So we're not aware of any of this. This has not happened yet. This is the future. But this is the level right here where price can come down to without stopping me out. This is the level right here. We can trade all in here and it won't stop me out. But I don't want to take that chance, guys. So I want to find out what candle created this level. What candle got us to this level or broke into this level? So I want to go back. And this is the candle that created this level right here. So my stop would actually be behind that candle that creates the level. And as you can see, here's why I say your stop will be a little bit wider, but your stop isn't challenged, right? And then you have a 225 risk, which you should be risking in percentage anyway. 2%, no matter what, no matter how many pips it is. And then you went straight to the take profit. Straight to the take profit, simply because we're not placing our stop loss at our level. We're placing our stop loss behind the candle that created or initiated or broke through the level. Because the market makers or the banks, they're not going to bring price this low just to hit your one stop. Like they'll bring it, they'll retest the low. They will retest this low, but we don't want our stops at this low, right? Because we know, and we've seen it enough times, that this can be tested. They can take us out here. But the odds of them coming all the way down here to take us out, slim. They're not going to come take us out there. Okay, so let's look at another example. Let's go to a different pair. Let's look at the pound JPY. Why the pound JPY, guys? Because the pound JPY has huge swings. This currency pair is called the beast for a reason, because it has dramatic swings in it, right? So let's look at this on the daily time frame, right? As a matter of fact, let's do this. Let's do the 4-hour time frame for our 4-hour traders, right? So let's say, for instance, I want to find a pair that can get challenged, that may get challenged. So let's go. Okay, so let's go in here. Let's look for a buy in this section right here. We're looking in this section here because we have a lot of wicks down here. That could have potentially stopped us out. All right, so let's say our buy setup came here. buy setup was on this candle right here. That's our signal candle to go long. Here's our entry candle, our trading candle, because we don't trade till this candle here closes. So buy stop order. Let's say if you're doing stop orders, you can do stop order or limit orders or market entries. Doesn't matter. What's important is a stop loss placement, right? Keep in mind, none of this has happened yet. Got to kind of use your imagination, guys. None of this has happened yet. We don't know anything about price coming low here. We don't know about these things. We're not trading based on hindsight. We're not placing our stop loss based on hindsight. We don't know these things have happened yet. But we know that here is the level, and we want to place our stop at the candle that started the level. Which candle created or pushed through this level? This is the candle that started the move that pushed through the level. Started the move that pushed through the level. This is the candle. Our stop goes here. Price never challenges it. Yeah, we had a little wider stop loss, 163 pips, but we realized that that's a 2-to-1 there, 3-to-1. This is almost a 4-to-1 trade. I would have gotten out here at like almost a 3-to-1, 2.5-to-1, but that was that. That is that trade. I would have gotten out at this level here, right? But what do we notice did not happen? Your stop loss wasn't hit, even though we had swings that swung lower than your initial swing low that you took the trade on. We didn't know that this was going to happen. This is in the future. Okay, let's look at another pair. So let's look at a pair taking trades off the 1 hour time frame. Let's go 1 hour. Let's say we did the Euro USD, we did a pound. Let's do let's do the USD JPY. Okay. I haven't preset these, what charts I'm going to look at. I'm just picking charts. All right. So USD JPY, I think this is the second most commonly traded pair. So let's look at an area where swings, where stops could have been hit, right? So this one's okay. So let's look here. Here's a really good one, because look how this market swung up here. Let's see if the stop placement strategy would have helped us. Here, so our signal is here. This is our trading candle. This would have been our initial stop. This is our level. Here is our entry. Close of that candle. I'm just doing buy stop orders. Stop orders. So that's been a sell stop order. Now let's go find the level. Now sometimes you can find this level on the lower time frame, but one thing I left out, you want to try to find the level on a higher time frame, because that gives you a clear idea of the level. So let's go to the 4 hour. Okay, here is our level here. Clearly we see the level back here. So who started this move that broke this level? Who? Okay, right here. Who started the move that broke the level? Here's the level, the level, the level. The move was started off this candle right here, because you had a down candle, then we got a reversal candle. This is the candle that started the move that created this level, So our stop will go back here. Let's see if we clear that stop hunt. Yes, we cleared it. This is our entry. This is where they pushed the market, and we ate good. We had an 81 stop. It's 103, 220. I'm telling you guys, this is the best way to place your stop loss. Let's look at one more. I'm hyped up now, amped up. I didn't know that was going to clear it like that. Let's look at one more. So let's go down to the 30 minute. Now, I don't really test it on these lower time frames, like I said in the beginning, but let's go for it. Let's go for it. Let's go for it. All right. So here is the 30 minutes. So this is our signal. Let's say, well, we would have been going long. Let's not look at shorts, because we would have been going long because price broke up. We would have been looking for up trades. So here is the bam. Here's our signal to go long. Signal to go long. Here is our trading candle, because we enter on this buy. The break of that candle, because that's the candle we're trading. Here's our level right here. Here's our level. Our level would have been here. We don't know that this is going to happen, guys. We don't know this is going to happen. We do not know this is going to happen. But here is our level to go short. So let's go up 1 hour and find the true level. The level, we want to find the run that created this level right here. Let's go to the 1 hour. This is the level. It's easy to see this. This is the candle that started to move to the upside right there. Now, like I said, you have a wider stop loss, but you're going to win more trades this way. So a wider stop loss simply means, now keep in mind, you should be trading percentages. We don't trade for real dollars. We trade for percentage. So what I mean by that is you should be risking no more than 2% per trade. That's my rule. Even if you risk 5% per trade, you're going to make money with this strategy. Because look here, your stop loss is not going to get hit. 152 pips. You already made it here on this 1-to-1. So if you were to risk 5% if you risk 5% on a $500 account, what is that? 10% is $50. So you risk $25. You made your $25 back in a day and 2 days. 2 days. You take your 1-to-1 take profit, and you can hold for 2-to-1. But just to let you guys know, you're winning more trades and your stop isn't getting hit at all. So need I say more, guys? You can back test this strategy on your own platform. This is the best stop loss strategy in the world, and I guarantee you this will help you win maybe 80% to 90% of your trades. I know I say that loosely. Of course, it depends on the strategy you trade, how many trades you're going to be taking, the time frame you're trading on. So all of those things do factor in. But if you're swing trading like I do, I guarantee you will win more trades. I shouldn't say how the percentage of trades you're going to win. I know what I win, but this is the stop loss strategy you want to implement if you're more concerned with winning trades. Okay? Alrighty, guys. Learn and trade Forex. Have a good day. At the end of these videos, I always forget to tell you guys if you want more Forex education, I have a blog, I do a podcast, and I post trades, or you can book a one-on-one session with me to talk about your trading, talk about where you want to go with your trading, some of the things that you struggle with, or if you just want to learn the way I trade, you can reach me at www.learnandtradeforex.com. Alrighty, have a good day.